So here's the daily chart. One of the possibilities is, just to point out, possible second leg trap here. Bulls buying the close, betting on a second leg up, maybe a measured move from here to here projecting up. And the bears hope that the bulls are disappointed here with this doji and will look to get out break even back at the high close of the 27th. And it's possibly the bulls giving up here. However, still 4 consecutive bull bars, probably going to go at least sideways. The bears need to reverse. For this to be a second leg trap, the bears want a reversal. Even if it is a second leg trap, we'll probably hesitate somewhere maybe around the 39.25 area. And, I don't think we're going to go to a new low. Even if we did, though, probably a trading range at best for the bears. 5-minute chart. We opened within yesterday's range, and overall in the day, it was a trend from the open bear trend, strong bear breakout, couple legs down into a wedge. The wedge was tight. First reversal up was minor. We ended up having a lower low major trend reversal that looked minor at the time, but it turned out to lead to a major reversal. And even right here, we may get a higher low major trend reversal tomorrow, and the bulls try to break out to the upside. Let me do this. There we go. First bar of the day. Doji bar gapping up above these highs, possible wedge. Say possible bull breakout of a wedge, test of the top of this trading range up here. Here's the high of yesterday. It's a bad buy above, probably sellers above, and also probably buyers below. So some bears will sell the close, betting that bulls will be disappointed and are not willing to buy the close, which is kind of what happened here. Other bulls will sell at a new high. Bulls will buy below bars, buy this low, maybe, what is this, 52, maybe 5 points below this low. And you can see bulls made money buying during bear bar. So it's a sign of a limited order market. Is it sell the close here? Probably not. Probably disappointment. And if you're a bear, you got to be worried about a bull bar closing on its high. Even though you're in the top of the range, there's that possibility. Bar 2 is a strong enough bear bar that probably is strong enough surprise you'll probably have a second leg down. But this is a sign that this may be a bear leg in a trading range, and we may get an opening reversal at the moving average. Bar 3 barely closed below the bar 4 right here, barely closed below the low of bar 3. Doji, probably buyers somewhere down here. It's a possible formation of a wedge, so on a smaller time frame, we went down on the first bar, up on the second, down on the second, so that's 2 pushes. So 1, pull back, 2, and then pause, 3. So it's 3 pushes down. It's a small wedge, but the channel down's tight, so probably buyers below, but again, there may be sellers somewhere around the midpoint. Bull bar closing on its high, possible micro double bottom, down and up, down and up. Some bulls, it's an okay stop entry buy above, but it's forcing you to buy in the middle of the range and in the upper portion of this range, so it's not an ideal place, but you can take the buy, and although I would not, and wait, it's forcing you to buy. The risk is big, but you can take the buy and hold for, maybe you get a bull trend from the open, but it's a low probability trade. Here's a second entry short, and it's a test of the high close up here, test of the open of the day. It doesn't look like a credible short. It's a second failed breakout of this lower high right here. It's an okay short, but again, trading range market, forcing traders to sell low in the tight trading range, or at least the opening range, just like this is forcing traders to buy high. This is forcing traders to sell low, probably buyers below. And while it doesn't look like it on this time frame, this bar actually broke all the way down and actually went above this low. So if you would have bought this low and scaled in, you would have made money. Here is where, let me back up. So now we have a wedge, 1, pause, 2, pause, 3. You can also say it's a failed breakout of a wedge. And, it's reasonable for the bulls to get a bull inside bar closing on its high, maybe right here, and for the bulls to buy, and maybe we test up. This is where the bulls gave up. And anybody that was buying below bars, buying this bear close, anticipating that we get a bull inside bar, buying the low of this bar, they quickly got trapped on this bar. This is a strong enough surprise, 3 consecutive bear bars, that the bulls are likely giving up. We'll probably go for a measure move down to here. And we know we reached this measured move. I'll leave it for now. So always in short, stop up here. Ideally, stops probably above this high. If it's going to keep going lower, it shouldn't go above here. It's still forcing you to sell low in the range. So traders that are selling here they're aware that this could be a double bottom with here or here, and this could be a higher low. So if they are selling, they want quick follow through. And if there's disappointment, such as like this, so bear bar, bear sold, disappointed, look to get out break even, they may do that and exit break even on the trade. Follow through bar, breaking below the low of the past many bars, probably strong enough for a measured move down. First measured move target would be the open of this bar to the close of this bar. This is where the market clearly became always in short, so probably going to get a measured move of both of those bars. Another big bear bar, still always in short, still sell the close. And if I've been saying buy the close, I meant sell the close. But possible sign of exhaustion, consecutive sell climaxes, 1, 2, 3. It's tight enough channel that any pullback is probably going to be minor. And it's really dangerous to be buying closes here, even though this is a trading range and the bulls are probably going to make money. You need a very, very wide stop. It's just not worth doing. So, and it kind of goes back to you want to keep things as binary as possible. So, it's a bear breakout. I only want to look to sell. Doji bar, after five consecutive bear bars, 3 of them closing pretty big, with pretty big bodies. A sign that sell the closed bears may stop selling new closes and look to sell a pullback. So typically, after 5 sell the closed bars, 6 sell the closed bars, when you get a doji, the market will start to hesitate. So this may be a warning that we may go a little bit lower, but we may reverse up. So a lot of traders will start looking to buy back shorts at new closes rather than selling closes. Bear bar, maybe you sell it, but again, getting really close to this low. Even bigger bear bar with a bigger tail. So again, this may be a sell vacuum test of this measured move projection. So not ideal, far away from the moving average. Probably better to look to sell a pullback. Disappointed bears will look to get out break even. So they're disappointed with this bar. They may set a limit order at this low close, get out of break even. You can see, let me see if it let them out. It let them out. It went 1 tick below the low this close, so it let the bulls out. Can you buy here? I would not. This is profit taken by the bulls. It's too early to be buying. Best the bulls need a micro double bottom and probably need the market to go sideways. So the market's probably going to do something like this, maybe like this, even here. It's too early to buy, but you can buy it and maybe use a wide stop, but not really an ideal scenario. Low and short, but strong sell-off, probably buyers below, but again, that's a pretty aggressive buy, even though it worked. And usually when you have a market that's this climactic, you expect 2 legs up. So, you can take that, but again, it's pretty aggressive. 2 legs up, testing the high of this bar. It's a double top. this is not by the close. It's a breakout bar follow through, but to me, this looks like a two-legged pullback in a double top, or what's at least going to be a trading range. I don't want to be selling. I don't want to be buying high in trading range. I want to look to sell. Therefore, I certainly don't want to buy up here. Big bear bar. Excuse me. So big bear bar testing the low close, follow through bar, strong enough surprise after a low too short. We may get a small second leg down. The bulls, and this was also a second leg trap. So the bulls, they hope that the market will get another bull reversal bar, maybe something like this, closing on its high, where the bulls can buy. This is not strong enough, so a lot of traders will, this is not strong enough, so a lot of traders will not buy above it. So we may get a downside breakout, which we did. Looks like buyers below, trying to form a wedge bottom, but we got a follow through bar, may go a little bit lower. Doji, but too tight of a channel. It's a micro channel. Probably sellers above, but it's okay to buy back shorts. 3 consecutive bear bars, 4 bull bar. You can take the buy, but probably need a wide stop. It's dangerous to buy after this many bull bars, although we are at credible measured move targets. And by the way, we got a measured move of this target, which the market hit on this bar. This is probably more profit taking than aggressive bulls buying. So it's okay to buy. If you get stopped out, you buy again. So maybe you trade a half size position, get stopped out, trade a full size position here. Low and short, but again, consecutive sell climax is far away from the moving average. Haven't touched it since the open. Not a great place to sell. If anything, I'd be buying down here, but it's hard to buy with that much selling pressure. Possible measuring gap here, so may have to go a little bit lower and test it, which we did right there. Second entry buy, wedge bottom, 1, 2, 3. Second entry buy of the wedge bottom, nested, 1, 2, 3. 1, 2, 3. So that increases the probability that we'll get a couple legs up, but again, tight channel. The market may have to go more sideways, and the first reversal up might be minor. So again, it's a possible second entry short, but after a wedge bottom, this is probably the first leg, pull back, and we get a second leg, which we got there. And then we have a bear bar. Again, this is all probably minor, probably forming a tight trading range. We have a double top here and here. Double top with here, maybe it's a wedge, 1, 2, 3. Probably buyers below, but again, if you're looking to buy for a swing, better to see more buying pressure. Big bull bar closing on a tie, so possible wedge, 1, 2, 3. Failed breakout of this double bottom. It's a lower low major trend reversal. Probably not enough bars up, but it's an okay swing buy, betting that we may get a strong minor reversal and low probability chance we just go straight up and test here. Although I think we will get back to this range and probably test the high of this bar. I just don't think this is enough bars for us to go straight up. Surprise bar with bad follow through. Strong enough of a minor reversal that the market will probably have, if it has a pullback, probably form a higher low, and the bulls will try for an upside breakout. Wedge top, 1, 2, 3, and possible measuring gap here. It's a micro channel, so credible to get out of shorts below this bar or longs below this bar. Difficult to short, and the bulls just aren't doing. The bears aren't doing enough, so it's a micro channel. 7 bar micro channel, 8 bar micro channel. Not enough bull bars, probably buyers below, and market rallied in a small pullback bull trend. So this happens sometimes where you get a minor reversal that morphs, where the minor reversal, although it wasn't that many bars up, wasn't that many bars down, it leads to a major reversal. Also, we had an initial range here. Market broke below it, and we tested back into this range. When the market has a lot of trading range price action and you get a bear breakout, it increases the chances that the market will eventually test back to the upper portion or the lower portion of the upper range as it did today. Hope this video helps.